So we have completed from asset the basic configurations. Okay, like this organization structure completed, then integration also completed. Okay, then we will, okay, valuation also completed. Next we will do the depreciation. So here we will create like a couple of things are required. One is your multi-level method is required. That is nothing but different depreciation methods we need to configure. Then we need to configure the depreciation key. So if you remember the yesterday that structure, let me draft it once again. This is your asset class, and these are your multi-level methods. So here we will take straight line method and WDV method, and this we will link with multi-level method with depreciation key. These are depreciation key, and this one we will link with base method, and base method, through base method we are going to calculate the depreciation. So this one I will take as SAP standard. So I will take 0014, but if you want you can create this depreciation key and multi-level method we need to configure. So go for valuation method, depreciation key, calculation method. So this one, if you want you can configure, otherwise we will take this 14, let's say. Select, go details. So we will take here ordinary depreciation, and with some percentage, the depreciation method will some percentage that we are going to define in the base method, sorry, in the multi-level method. Define multi-level method, add your chart of depreciation, new entry. So multi-level method I am taking the same SLM. Okay, so our asset is vehicle. So multiple depreciation methods you can create. Vehicle at the rate 10%, and validity start date is, let's say, from capitalization date. So we have two methods, two depreciation areas, 1 and 10. So 1 we will take capitalization date, and 10 we will take the start date. So we will see the difference also. Capitalization date, and double click on levels, new entry. Acquisition year, don't specify any year here because it's a general configuration we are doing. So take 4 times 9. At the time of transaction, whatever the year will be there, that system is going to take as capitalization year. Years, life of the asset, that also we are going to specify in the asset master. Period, so how many times we are going to run the depreciation? Yesterday we have defined we are going to run the depreciation 12 times, means monthly. And as per the straight line method, depreciation should be calculated on acquisition value. So 01, what is the percentage? Update it. One more, WDV, let's say this is 15%. Validity start date, here we will specify one not from capitalization date, from ordinary depreciation start date. That means on same asset we will see in both way. Double click on labels, new entry, acquisition year, years, period, and base value. This is not on the basis of acquisition value, this is on the basis of book value 24. Okay, so we will see the difference and take the percentage rate. Then maintain the depreciation key. Period control and this declining balance, I will take the standard. Period control means why it is required. For example, next year, whatever the acquisition will be there or retirement, what should be. So we will take the percentage. Maintain. Okay, this is the T code is AFAMS. This is T code is AFAMA. Maintain, not this one. Maintain depreciation key. New entry. Depreciation key A. Period control according to fiscal year. That means how we have maintained our fiscal year variant, same way we are going to maintain the depreciation periods also. And depreciation to the day means if you are going to, or if you will not activate this one, then it will take monthly. For example, let's say we are going to acquire the machine today or vehicle today. So it is only for 4 days or 5 days it is going to calculate the depreciation. If you will activate depreciation days wise, otherwise it will take the full months. So it depends on your requirement. Double click on assignment of calculation method, new entry, depreciation calculation type, ordinary depreciation. From the start of depreciation, add the base method 0014. I'm taking the standard. This one is standard. This one is standard. Multi-level method, add it. Straight line method. One multi-level method is SLA and its corresponding class. So this is your straight line depreciation. No change, automatic changeover. One more. %. Double click on assignment of calculation methods. New entry. From the start depreciation. This is WDV. Declining balance depreciation. Save. So two depreciation key created. A and B activated. Showing status inactive. Activate. Select. Activate. A also. Now, how we are going to use this depreciation key with asset class? So, for this we have one step is there, transaction code OAYZ, or here it is. Because directly we are not going to this multi-level methods we are going to add in the asset class or asset master. So for this, if you go to valuation, determine the depreciation areas in the asset class. Select your asset class. Asset class yesterday we have created W10. Line select, double click on depreciation areas. So 4 depreciation areas, 1 book depreciation, 2 group depreciation, and you can see it's freezed, right? That means we can't do anything here. Whatever the value we will put in 1, it will flow to 2. And tax is also active. That means we can add the value. Delta is also not active. So add layout 2000. What is 2000? 1000 you can take anything. I will tell you what is this 2000. Just deactivate right now. Activate. It's deactivated. Remove the activation option. Save it. And how system is asking here the depreciation key. So depreciation key, if you are going to add both case, let's say A. Let's say here you will add A, here also you will add A. That means in both method we are going to follow the straight line method. Let's say if you are going to add B, then it is WDB. So let's say here we will take A and we will take B. So that means here it is SLM and here it is WDB. SLM values will update in the leading ledger and WDB values will be updated in the non-leading ledger, because that's what we did the configuration. Depreciation key A and depreciation key B. Why it is automatically copied A? Because we have selected, or we did the configuration that way. This is my derived depreciation. Whatever the value I will put here in A, automatically it will copy to the depreciation B. That means depreciation 2. Save it. Let me show you what is this 2000. This is the screen layout for depreciation. We configured one screen layout that is for asset master, but this is the screen layout. Define screen layout for asset depreciation area. This one you can use standard, like we have used the standard, or you can copy from the standard. Both are okay, but new creation option is not there. This one we have used. Now we will create the asset master and one sub asset also. Sub asset means with reference to the main asset, we are going to create some sub asset. For example, if computer is your main asset, then sub asset may be keyboard, or let's say UPS. These are your sub assets. So when we will record the values, or we will maintain the asset list, so with reference to the main asset, sub assets should be maintained. AS01. Select your asset class, company code, maintain master data. No need to specify any capitalization date here. The acquisition date automatically system is going to calculate it. In time dependent, okay, here one field is mandatory. If you want, you can deactivate this field in field screen settings or in field settings, but we have cost center, we can add it. Let me show you where you can deactivate. In master data, if you'll go to the screen layout, define screen layout for asset master. W100 logical field groups. Now what is the tab? The tab is time dependent. Time dependent. It is nothing but field settings, and you can see cost center is required entry. That's why it is asking. If you make it optional, then it will convert into optional. But let's continue with cost center. Okay, now you can see here as in this, when we define the screen layout for depreciation area or depreciation key where we have linked, we have not specified anything here. That means this use life period, all these things we have not mentioned here, because we are going to maintain at master data level. Assume that you have only one asset, or under this one asset class you have only one asset, then you can also mention here, automatically you will find in the asset masters. Okay, but we have not maintained, so we have to maintain here. Let's say useful life of the asset 10 years as per the book depreciation, and this is, let's say 8 years. This value take 1, proportionate. That means acquisition retirement on the basis of proportionate, and depreciation start date here, and here it is. That means here the system will calculate the depreciation from this date, let's say. Why? Because maybe some accounting rule or something is there. So that's why we are going to follow this method. This is just my assumption, but you can take the ordinary depreciation start date also. Just show you the difference, I have taken this one. Now create one sub asset. So main asset created, one extension 0, create one sub asset AS11, sub number AS11. So with reference to main asset 1, we are creating one sub asset 1. So that number will be 1 extension 1. So all informations you can find derived from, or it is the source asset, main asset. Okay, now we will go for the transaction. One extension, one created. We will go for the transaction and we will acquire the asset. So what is the accounting entry? Asset will debit and vendor will be credited. So it's a invoice only, credit entry. So it's transactions. Posting F-90 acquisition, external acquisition with vendor. It's only it's an invoice entry, invoice screen only. Vendor is going to credit posting key 31 and asset is going to debit 70. Just like your F-dash 43 in that place. So we are using F-dash 90. Debit the vendor. Set purchased. Debit 70. Select the main asset. Main asset 10. Transaction type 100. Asset acquisition. External asset acquisition. Okay, I have a limit, tolerance limit. So let me take here 40,000. We can change it there. Let me take here 40,000. So what is the accounting entry? 40,000 debit, 40,000 credit. So vendor is going to credit 31, asset is going to debit 40,000. Post it. Document posted 10007. Let's note down this document. So asset acquisition document 19007. Let me post one more document. Sub asset purchased. Sub asset. So let's say this is 3600. Sub asset transaction type 100. post it. 10008. So we are assuming we have posted two documents 10007 and 8 under the document type K double I, because these are your asset transactions. Let's find out. FB03, check the document list. Not there. It is a limitation. So that means right now, whatever the transactions we have posted, it is only updated in the vendor. It's not updated in the asset record. So that's why I told you we have to do some manual activity so that, or some reconciliation so that it will update in the asset. It is right now it is updated in if I will search the document with KR, you will find these two documents. Suppose I will search it now, KR 10007 10008 current date. Okay, so this is, you can say, limitation. Now let's see the asset explorer, or it is known as asset, like you can say fixed asset register or asset details, AW01N, or okay, see this asset value 40,000. As per book depreciation, what is the depreciation? 208219. This is the proposed depreciation, right? Planned depreciation for the whole year. And if you'll see depreciation as per currency, group currency, it will convert into euro. The transaction converted into euro in a different value. That's why we have comparison purpose, we have taken this one. And if you'll see here, what is the depreciation? 2082. If I will select this one, check the depreciation, it's changed. So how it is calculated? It is calculated, let me show you the calculation. If you remember, we have taken in our depreciation key, we have in one, we are going to calculate the depreciation from the, when we have defined the straight line method. In one method, as for the depreciation area 1, we are going to calculate the depreciation from in multi-level method. Here from capitalization date. So here from capitalization according to book depreciation, because this one we have assigned with depreciation area 1. So capitalization date means proportionate from today, whatever the date it is calculated. Whereas as for the WDV, from the ordinary depreciation start date, and depreciation start date for this asset you have mentioned depreciation area, you have mentioned that we will follow 1 1. So that's why it is showing the depreciation for the whole year. If we'll select this depreciation area, it's whole year, that means 40,000 into 15% for the whole year. Okay, so depends on your configuration, it's showing the value, but it's proposed value. It's because if we'll go to the posted value, so posted value, everything is planned. That means as per this, you can see here the depreciation up to 5th month. Okay, so up to 5th month, you can see the value is 0 because we don't have the asset that time. During that period, we don't have the asset. From 6th month onward, you have the asset. But if you can see here, it's showing only some days, 4 days, 5 days only. So then next month onwards, it is straight line method and it's the fixed value, right? Whereas if you see here, it's showing the accumulated value. As previously up to 5th month you don't have the asset, so that's why these values are 0, but you can see this amount is too much. It's because here it's showing a accumulated value of 1 to 5th month, because actually as per our configuration for this period also we are going to calculate the depreciation, but asset was not there, but as per the rule we are going to calculate the depreciation. So that's why this value, it's a big difference is there in book depreciation and tax depreciation. I assume that this is, we are going to follow the income tax or some tax rule, and this is what we need to configure.
Hey, so for tax rule, actually, we have to calculate for the whole year. I didn't know that though. I
No, no,
thought
no,
it's
no, no.
only start with the.
No, no, no. This is my assumption only, just to show you a major comparison. That's what
Oh,
I did.
okay. Oh, okay.
Okay. So if I will take both the values same, just you will not get the idea the difference. That's why I have taken. It's not like don't take the misconception for tax with the whole year.
No, no, that's fine. Yeah, you're
Okay.
right.
Okay.
Thank you.
Now coming to the delta depreciation. So what is the depreciation value here? If we'll see this one, depreciation value is 208219. What is the depreciation value here? It is 6000. This is the difference. Delta means this is the difference between the depreciation area 1 and 2. So this depreciation we are going to add to the APC value. So that's why here actually no asset is there, like the acquisition value and all these things are not there. It is the just the difference. And ECC we are following like this, whereas in S4HANA it will be automatically adjusted. Now coming to comparison tab. Here acquisition value, this year proposed proportionate figure, and next year onwards here we are going to follow the straight line method. So the next year onwards it is the fixed value of depreciation as per the straight line method, whereas here it is on net book value. So that means, so on 34,000 this year closing value into 15%. So 5100 like this. So that's why we have selected, if you remember, in this method we have selected 01 on the basis of acquisition value. Here it is on the basis of 24 or on the basis of book value. So everything is automatically it's showing the depreciation. Even if you double click on this also, you will get the details also. Okay, now coming to the reconciliation account. Okay, check this one, 2500. So it's reconciliation account, like your receivable and payable, whatever the transactions we have posted, it is updated here. But see, the document type is KR. Whereas in same transaction, if you post in S4HANA, directly you will find the document type AA. Okay, let me log into the HANA system. Here some additional configurations are there because that is new asset accounting. Okay, you take this one. What is it? It is the document type AA. So directly whenever we purchased or we acquired the asset, it is updated with the respective document type, that is asset transaction. So this is one change. And another change is right now, if you'll see the details, on what accounting principle we acquired the asset, all these things informations are not available, that you have to maintain manually. Okay, so here this is the accounting entry, but if you'll see this accounting entry, so you can see here corresponding first, as usual, system is going to post a accounting entry, this accounting entry with this care. This is your ECC. And you can see with reference to this document type KR, we are getting another accounting entry, that is your asset accounting entry. And also you can see here on the basis of accounting principle and on what ledger all these informations are available. So you can see here. So on the basis of leading ledger, we posted the transaction. On the basis of this accounting principle, we have posted these transactions. And also in this client, the group currency is USD or Euro. I'm sure. So if you'll see here, this is my group currency. No, yes, USD. Group currency is also USD. So now you can see here, this now it is as per the group currency. Group currency option is in the existing system is there, but this presentation is not available now. Now, if I will change the accounting principle, two accounting principles we have taken here, IFRS and GAAP. Now, if you'll see here, this one we have assigned to the non-leading ledger. So this is my document currency. So this is W1 is our non-leading ledger, and you can see document type AA updated and on the basis of GAAP. So this additional information we are getting here, and the benefit is like this reconciliation right now it is incomplete in our stage, but here it is, the accounting entry is updated. Okay, so here one delta changes so far. But for this, some we need to some additional configurations are there. Concept of technical clearing is applicable. Okay, some derived document types we need to configure. Some additional configurations are there. Okay, now coming to here. So we have two assets and reconciliation account updated, but it's not yet reconciled. Now I'm going to run the depreciation. So depreciation, if we're going to run, so no need to manually calculate the depreciation, accumulate depreciation credited, depreciation debited. All these things are not required. User simply sorry, run the depreciation, and automatically the depreciation entry will be posted. Accounting, financial accounting, asset, periodic depreciation run, AFAB. Okay, let's say posting period, current period 6, and here also, like right now we need to rerun the depreciation multiple times. Monthly we need to run the depreciation, whereas in S/4HANA this is not required. At a time for the whole year you can run the depreciation in the beginning or in the end, whenever like as for your convenience you can run the depreciation. Because if I will go to the same screen, you can see this compare with this one, this this one, this it's completely removed here. Okay, so it's not there. So that means like you can run the depreciation for the whole year anytime. Okay, select list of asset or any specific asset also you can select here. Any for one particular asset or for all asset we can run the depreciation. With test run, execute.
Can we change the depreciation percentage during the year though? Like if we are not running for the whole year, let's say we are doing monthly, and after 6 months something happens.
You can change it. Yeah, you can change it in multi-level method. You can change it. I'm getting one error. Go to error log. So according to the posting cycle, you should post the period 001. That means as for our configuration, you need to run the posting depreciation posting from the period 1, that is from the January. But during January we don't have the asset, but you need to first time when in implementation you need to run the depreciation from the January or from the first of your financial year. So that is the error we are getting. Let me change it. 01, execute. No value, but no error. Test run completed successfully. So this was test run. Remove the test run, execute in background. This is the final run. I don't need any output, just run it. 2. Now let's see. Test run, execute. Okay, so this is your depreciation area 1, depreciation area 10. As per the depreciation area 1, this is your to be posted value, because it's right now it is test run only. So this is your main asset, this is your sub asset, and as per depreciation area 10, this is your main asset, this is your sub asset, and you can see a significant change is there, because here we are going to take from the calculation date and here from the first date, or depreciation specific, first of depreciation date whatever we have mentioned. And this value we are going to update in the 0L, this value we will update in the non-leading ledger what we have specified. So it's everything is fine. Now go for the final run for the period of June. Okay, and the posting date 30th June. Remove test run. Execute in background. It's done. You can also get the idea from job also. Okay, fine. Now let's see whether this depreciation updated in your Asset Explorer or not. Refresh it. Go to posted value. So for the month of actual planned depreciation for the whole year, but actual depreciation posted 6575, and this also 2975. But this entry you will find in the non-leading ledger. This entry you will find in the leading ledger, and similarly for the sub asset also. Now, if you'll see the ledger entry, that is your accumulated depreciation or depreciation. Right now, no difference is there. First month only. $61,667, and how we got this 61,167? This is the value 6167. Sorry, 6167. This is your leading value. So ABL 3N means this is the leading entry, and where we will get this value 3243. If you'll check the non-leading ledger entry. GL account, same non-leading ledger 2501. Specify your ledger here. What is our non-leading ledger? W8 something. W5. Yes. Select your ledger. Three two four three one two. 324312. So that's why we have maintained two depreciation areas, and along with two like leading and non-leading value. Leading value updated in ABL 3 and non-leading value updated in the non-leading ledger.
Pradeep, I have a question. So for if I mean the depreciation entries and the leading and the non-leading.
Okay, done. Now, so depreciation both postings are possible. Now let's say we are going to sell the asset. One asset we are going to sell. So this is known as retirement of asset or asset sold. Asset sold. So what will be the accounting entry? Let's say we are going to sell the asset through customer. So customer will debit and revenue it's going to credit. Let's say asset value was 40,000 and we are going to sell it in 35,000. 35,000. Okay, maybe here we will say we are going to credit the asset. So 35,000. So in this accounting entry, if you're going to continue like this, we are ignoring the revenue recognition, because when you are selling something, customer is debited and revenue is credited, sales is credited. Here also one credit entry for revenue should be there, but sales we can't credit. So that's why we will debit the customer and we will use one clearing account, revenue clearing account. So this will be credit 35,000. Automatically we'll find a debit entry for this. You will find a debit entry for this and it will be 0. Then finally your customer will debit and asset will sell, and maybe in this sale profit will be there, loss will be there, whatever. Okay, let's me post this one. Revenue clearing or the asset sold. It is known as asset retirement F-92. Fixed asset, transactions, retirement. Select the customer. Let's say we are selling this one on 28th. Or yes, 20. Okay, 28th. Select a customer. $35,000. Credit entry, but don't directly credit the asset. Credit revenue 50 GL credit. If asset you will credit 75, but in that case revenue entry will be ignored. Select the revenue clearing account. Revenue clearing 2005. Transaction type retirement with revenue 210. Retirement with revenue. Select the asset retirement checkmark. Simulate. Now we need to specify which asset we are selling. So asset number 1, asset value date, whether it is complete retirement or partial retirement. Now check the entry. Customer debited 35,000, revenue credited 35,000, and revenue, this is your revenue credit 50, revenue is debited also 35,000. So loss on sale 14,967, and another debit entry is also there 3288. So what is this debit entry? So total depreciation we have calculated for this asset is $65.75, but we are going to sell the asset before that. So some amount which is already credited we are going to adjust. That is the debit entry. So you can see this is a debit entry 75, right? 70 entry. So this amount which is already in the main asset credited for, because we run the depreciation for the whole month, and we are going to sell it. So that amount is automatically set up or it is adjusted. Okay, post it. So this now you should not have this asset, main asset. Okay, we don't have asset now. 35,000 retirement value, ordinary depreciation adjusted 3288, and balance is your loss amount. Right? Now, check the accounting entry also. Here also, right now you're having only sub asset is there, 3600 debit entry, this 40,000 debit entry and its corresponding entry, credit entry posted. Here also we did not got the accounting update, that is AA. It's only the acquisition and retirement, those entries are updated. Now, second asset. Assume that this asset is damaged due to some accident and 90% of asset value completely scrapped. So that means out of this 3600, right? Yes, out of this 3600, 90% of the asset value we are going to transfer to, because here it is transferred to loss account. If you'll see here, this entry transferred to loss account, whereas this entry, it's a capital loss. This 90% we will transfer to another account that we have created, the scrap account, because it's capital loss. Undistributed loss we will show in the balance sheet if we don't have the capital gain, because either we will adjust it against your capital gain, otherwise we will carry forward to next year, or if it is approved in AGM, then only we can adjust it. So that's why, as it is capital loss, we are going to transfer it to another account. For this, you need to, ledger we have created, but you need to assign this one. Just give me 1 second. In integration, assign GL accounts. If you'll see it, what was our account determination? W1000. You need to specify loss made on asset retirement with revenue. If with revenue, then we have specified the revenue clearing. If it is retirement without revenue, or it is known as scrapping of asset, then you have to specify the ledger here also. So add the ledger. Scrapping of this account 1516. Okay. Now post the scrap. Asset retirement by scrapping ABAVN. Select the asset, I mean sub asset, and it is, let's say, retired on 29th. Asset value date. Partial retirement. Partially scrapped. %, right? Percentage rate 90. Prior acquisition or current year? Current year. Post it. New transaction posted. And check the Asset Explorer. So now you're having asset 10%, that is 360, and balance amount depreciation here also something adjusted and transferred to loss account. But this 3236 you will find in the scrap account, not in the loss account. Scrapping 1516. Fine. So now we don't have the asset, and but you will see here some, if you'll run this step, ASKP. We have some delta depreciation was there, so check this one. Execute. Document type for APC is missing. Okay, one step is missing. Where it is there? Okay, this one is missing. Specify the document type for periodic posting of asset values. Our company code, document type. So where we will add it, asset posting, APC value AA. Now run it. This step is not there in your S4HANA. It is not required. So whatever the difference amount was there, so difference in each transaction, some difference was there. So you can see loss on scale, loss on sale, scrapping, and accumulation. So all these values, total values, we are going to transfer, okay, to the main asset. So that is, we are going to adjust with ledger group W5. So this is the concept of delta depreciation. Why this delta is arise? Because we have taken different values and different years. So due to this difference, so this delta we need to adjust. So delta related to your loss on sale, some difference was there, and in scrapping. These are the two transactions we did, right? So these transactions we adjusted to our ledger group, non-leading ledger. So partially asset accounting completed, asset under construction is pending, that we will do after internal order, because without that it is not possible. So here also 2 to 3 sessions will be there, and some year-end activities related to assets.